Something major just unfolded in the last 24 hours, and it could move gold and silver more than anything we've talked about recently. But here's the twist. Two huge events just collided within the same 72-hour window, and they're pulling precious metals in opposite directions. First, the geopolitical side. Multiple reports from major media outlets say the United States is preparing for potential military action against Iran. Sources inside the administration are signaling a very high probability of strikes in the coming weeks, and the president himself said a decision could come within 10 to 15 days. That's not background noise, that's a ticking clock. At the same time, the Supreme Court ruled against the administration's tariff strategy in a 6-3 decision, striking down the use of emergency powers to impose broad tariffs. That throws over $160 billion in collected tariff revenue into question and temporarily reshapes the inflation outlook. So you've got war risk, which is historically bullish for gold and silver, and a tariff ruling that could briefly ease inflation pressure, which can weigh on metals. That's the collision. Let's talk about the military buildup, because this is what could change everything overnight. The U.S. has positioned 2 aircraft carrier strike groups in the region. One is already in the Arabian Sea, another is heading toward the eastern Mediterranean. When both are in place, the operational window opens. Around them are multiple warships across the Persian Gulf, Red Sea, and Mediterranean. There are reports of an Ohio-class submarine in the region, capable of launching Tomahawk cruise missiles. In the air, more than 100 aircraft have been positioned, including advanced fighters, electronic warfare jets, surveillance planes, and strategic bombers. Missile defense systems have been deployed across the Gulf. Logistics flights have surged for months. This doesn't look like a symbolic show of force. It looks like preparation. Diplomatically, talks have taken place, but officials have described progress as minimal. The administration wants permanent limits on uranium enrichment, missile programs, and regional proxy activity. Iranian leadership has publicly rejected those conditions. Meanwhile, Iran is conducting joint naval exercises with Russia and China in the Strait of Hormuz. That matters. The Strait of Hormuz handles roughly 20% of global oil supply. If conflict disrupts that corridor, even temporarily, oil prices spike. When oil spikes, inflation spikes. And when inflation spikes during geopolitical instability, gold and silver historically respond fast. We've seen this before. During past Middle East conflicts, metals moved overnight, not gradually, overnight. If strikes begin, there may not be time to reposition. You're either already in or you're chasing price. Now, let's flip to the tariff ruling. The Supreme Court said the emergency powers law used to justify the tariffs does not authorize broad trade taxes. That initially suggests inflation pressure could ease. A stronger dollar in the short term could create volatility or even a pullback in gold and silver. But here's the nuance. The administration has already indicated it will pursue alternative legal pathways to reimpose tariffs under different statutes. Some of those authorities have survived past legal challenges. So even though the ruling creates uncertainty, it may not eliminate tariffs entirely. It may just change the mechanism. So now you have 4 broad possibilities. War breaks out and tariffs return through other channels. That's the most inflationary, most bullish scenario for metals. You get safe haven demand plus higher energy costs plus trade-driven price pressure. War breaks out, but tariffs fade permanently. You still get the war premium, which likely dominates, but you could see more volatility as markets price in conflicting forces. A diplomatic deal happens and tariffs return. That likely supports metals long-term due to continued structural deficits and inflation, but without the immediate war premium. Or a deal happens and tariffs stay gone. That's the one scenario where you could see a more meaningful short-term correction. But even then, structural issues remain. Because here's the bigger picture. Physical silver inventories on major exchanges have been declining. Industrial demand remains strong. Central banks have been accumulating gold at elevated levels. Government debt continues to expand. Those drivers don't disappear because of a court ruling or a press conference. If you already hold physical metal, understand what it represents. It's insurance against exactly this kind of geopolitical and monetary instability. Short-term volatility is normal in bull markets. If you're thinking about entering, understand that waiting for the perfect dip can mean missing a headline-driven surge. Markets can move 10% or more in days during crisis events. If you're in paper positions, recognize that during extreme volatility, exchanges can raise margins or adjust rules. That's part of how the system manages stress. Right now, we are in one of the most catalyst-heavy periods I've seen in years. Potential military escalation, a major Supreme Court trade ruling, ongoing physical inventory drawdowns, active geopolitical alliances forming in strategic waterways. Either all of this is already perfectly priced in, or the market is underestimating the speed and magnitude of what could happen next. Personally, I think the military buildup suggests the probability of escalation is higher than most people assume. And I think the tariff situation creates temporary uncertainty, not permanent relief. The key things to watch over the next 48 to 72 hours are carrier group positioning, official statements from Washington and Tehran, oil price reactions, and physical metal inventory reports. If those all start moving in the same direction, volatility could accelerate quickly. This is not about cheering for conflict. War carries devastating human consequences. But from a market perspective, war historically drives trends, not just noise. You can overturn a tariff, you can rewrite a trade policy, but you cannot instantly reverse a massive military deployment, and you cannot refill declining physical inventories overnight. The forces in motion right now will resolve one way or another, either through a deal or through escalation, and either outcome has implications for gold and silver. This is my opinion, not financial advice. Do your own research and make decisions that fit your situation, but be prepared. The next few days could be pivotal for precious metals. Let me know in the comments which scenario you think is most likely. Escalation with tariffs returning, escalation with tariffs gone, a deal with tariffs returning, or a deal with tariffs gone. Share this with someone who holds gold or silver so they're not caught off guard. And if you want real-time updates as this unfolds, stay locked in. Stay tuned to the Silver Thesis channel for important news and updates. I'll see you in the next video.